Hello guys, welcome back to another video. Today we're going to be trying something different. I'm just going to be giving you guys my thoughts on the recent downturns in the stock market. So first things first, like I mentioned, the stock market, if you look at the S&P 500, I believe currently it's down about 5-ish% for the year. But this isn't considered a crash, and what we're actually looking at is perfectly normal for the stock market. This is just a correction, and again, we can't be upset. We've had a crazy bull run. The stock market has been roaring over the past 2 years. 220% plus years is incredible. So it makes sense that we see, a little drawback where prices regulate a little bit, and it's just all part of the normal things the market does. And we should really consider, what should one be doing when this is happening? When we have a correction going on in the market, somewhere between a 5 to 10% pullback, how can we make sure we're still investing wisely during these market corrections so we can come out ahead and, make money on our investments? That's super important. That's the whole idea, right? And what we really want to focus is when we have these dips in the market, the best thing to do is obviously avoid panic selling. You want to make sure that when you see the stock market go down, you don't freak out, you don't start selling all your assets because even for example, if you have a stock and you're down, let's say 20% on it, those aren't realized losses until you sell the stock. However, the same is true vice versa. If you're up 20% on the stock, those losses, those profits aren't locked in until you sell the stock. So again, number one is make sure you're not selling. Investing is a long-term game, and over a 20-year period, the S&P 500 has never returned a negative return, right? And then the next mistake, trying to time the market. You know, depending on where you consume your social media, you might see people, for example, on TikTok or Instagram Reels or YouTube Shorts saying this is the bottom, lump sum all your money, put your money in the market right now, otherwise it'll be the biggest mistake of your life. However, you don't want to do that because there's no such thing as a perfect time to invest all your money in the market. You never truly know whether we go down another 5%, 10% from here, or if we bounce back up like nothing really occurred, right? At the same time, though, you want to make sure you're not just freezing and doing nothing. While the stock market is dipping and having a correction, instead of being scared, you should see this as an opportunity. I believe Warren Buffett said, when people are scared is when you should see the greatest opportunity in the market because you want to be different. You want to kind of move the opposite of the market. And when there's a lot of greed in the market, that's when you want to be cautious and maybe tune it down a little bit. So you kind of want to play opposite of the sentiment sometimes. Whenever people are super scared that the market's going to keep crashing and we're going to go into a bear market, that's when you should view it as a buying opportunity. And whenever people are super high on the feeling and they start chasing the newest hype stock, the newest Palantir, the newest stock that they want to make 50% gains in 1 year, that's when you should start being a little scared of the market because sometimes those really high returns are too good to be true and you could get burned, right? So the way to invest wisely during this market correction, even if it continues to dip further, is to dollar cost average. What this simply is you're going to set up essentially a recurring buy on a consistent time frame. It could be every week, every day, every month, whatever works best for you. Choose a specific amount of money that you can invest, for example, every month, and continue to do so. Don't stop. Because when the market is dipping and you keep buying consistently over time, instead of, for example, let's just say you're investing $100 and hypothetically the S&P 500 and one share cost you $20 like a month ago, but now it's 15. With those same $100, instead of just getting 5 shares, you're getting more than that now. So you can stack up on shares while the prices are low, also driving your average cost low, right? So to recap, you want to make sure you have a fixed amount regularly that you're investing. Next, for this to work, you want to make sure you're focusing on high quality investments. You don't want to be running this into AMC or the newest hype meme stock that your best buddy told you is going to do 1,000% from here, right? You want to be choosing this in high quality investments. You could do things such as Microsoft, Amazon, the S&P 500, QQQ. Do something that you have belief in will be around at least for the next 20 years. And when it comes to this, truly there's nothing better and safer than a well diversified ETF. Like I said, you can either go for S&P 500 or QQQ because these are both really high quality ETFs, which over the long term will increase your wealth and will have positive gains on your initial investment, right? And if possible, like we mentioned, dollar cost averaging, this is where, for example, Warren Buffett is currently sitting on his fattest cash position ever. I believe the numbers are somewhere around $340 billion. This is where if you have some extra cash that you saved up throughout the year, if you see a really good opportunity, don't be afraid to get shares at a discounted value. For example, right now I'm looking at Google. I believe Google is seriously undervalued, and yes, there's threats to Google such as LLMs and other stuff, but at the same time, Google's been one of the best innovative companies over the past 20 years, and they have so much of the search market in their possession. And not only that, then you have their ventures like Waymo and other investments that this company is making. And I just believe with the CEO they have, they're going to keep growing, and the sentiment around Google is way too negative. So personally, for me, I'm currently picking up some shares of Google because I really like the current price of the company, and I believe it's undervalued. Now, if we're in a market correction, what else can we do besides dollar cost averaging? Well, if things continue to get out of hand, there's always the fear of the recession. In fact, a lot of people are saying that there's recession indicators, and when people start being negative and have negative consumer sentiment, they kind of spread that around, and eventually the sentiment spreads. So it's sometimes we even cause our own recessions through accumulative negative sentiment across the nation, right? So here's some things that you should make sure you're doing. Obviously, I love to talk about this is having an emergency fund. There's nothing better for your safety during an economic downturn than having an emergency fund. This is somewhere between 3 to 6 months of expenses, no less, but it could be more if you want. If you want to be conservative, you could do 9 or even 12 months, and this will help you. For example, let's say we have a 2008 crash. If you get fired from your job, if you have these 3 to 6 months of living expenses, this will help cover your rent, any car payments, any expenses that you have, so you're not going under, so you don't have to take on credit cards to just be able to survive. This is your safety net, and it guarantees you that you'll have time to work through whatever hardships life might throw at you. Next is to have diversified stocks, right? You don't want to put all your eggs in one basket. You could go into more defensive sectors. For example, such things as healthcare, utilities, consumer staples. These three categories tend to perform better than, for example, tech, AI, semiconductors during an economic downturn, right? This is, for example, one moment where SCHD is a good investment because it will help. It doesn't fall as much during the pullbacks, and it will pay you an income even if the stock just moves sideways throughout the year. And most important, it's important to stick to your long-term goals. You have to realize that the best things in life don't come quickly, so you have to be patient. And a lot of this is discipline because motivation will come and go. But by delaying the gratification of trying to find the new hype stock or even the new meme coin, you're ensuring yourself a safer and more guaranteed future where your wealth would be larger than it is today. And you're not only doing this for yourself, you're doing this for your family, for your future kids, and to set your family off at a better spot than you were given when you entered the world, right? So I'm not saying this will turn into a recession, but key things that we should take away when thinking about this correction is that the downturn won't last forever, right? This is why it's important to take this opportunity because the market will recover. Whether it's 3 months from now, whether it's 6 months from now, a year from now, the market will recover. And in the future, your money will go up in value when the market recovers. So as long as you're buying high quality investments and you're letting the time do the work for you, your wealth will go up. Your money will grow. You just have to be consistent and choose high quality investments while dollar cost averaging. So those are about my thoughts on the market correction. Like I said, I'm not selling. I'm not doing nothing too fancy. I'm just buying up Google and doing my consistent dollar cost averaging that I've been doing for the past year and a half. It's basically business as usual. I just like Google here, so that's the only thing that I'm doing different than my usual $583 into my Roth IRA every month. And yeah, like I said, the key is to dollar cost average with consistency into high quality investment vehicles. And that's how you will grow your wealth. It will just take time and you got to be patient. That's all there is to it. Please feel free to leave a comment below if you enjoyed this type of video, if you like my other content better. And let me know, what are your plans to get through this market correction? What are you investing in? And how long do you think we'll be in this correction? Thank you very much for watching. Take care. Have a great day.